So peep this real quick here. Today we are going to be talking about psychology, like more on psychology. You get me? Because psychology is really, really important when it comes to Forex. Understand? I see a lot of people talking about psychology, but you really don't know what is psychology. Psychology is just knowing yourself as a trader in the market. You get me? You have to know yourself, what I am, what you are, what you do. Like, you got to understand your patience, you have to understand your FOMO, you have to understand your greed, and these things takes time. You cannot just understand yourself in a year or 2 years. You can use, like, let's say, you can use 3 months to 1 year to learn technicals, but you see the rest 3 to 4 years, that's psychological base. You get me? Even the professional traders are still messing up psychologically, so you have to be like in sync with the markets. You get me? That's why we have risk management to like protect us, because we can never trade like a robot. We humans, we have emotions. So psychology is when you learn how to control those emotions. You get me? Your day-to-day life affects your psychology, and a lot do affect your psychology. So that's why it builds over and over with the years that passes. Understand? My style of trading, even if I teach you how to trade the way I trade, we cannot trade alike. You might be seeing different market structure than the way I'm seeing my structure. You get me? So I might be taking buy today and you will be taking sell, but we are saying something similar. You get me? But that's just about psychology in a nutshell. I just want to show you something about market structure, how market structure operates, and when it comes to psychology. I've been hearing people talking about ICT and other blocks, fair value gaps. I know it works for some people, but to me, I don't see that as something I'm going to look into. You get me? Because I really love to trade simplicity. Like, you need your strategy to be something you can just explain in the simple terms. You don't need so many terminologies. It's just simple. People trading other block, people trading all those fair value gap. It's just the same thing. See, if a trade is going higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, this is the last higher low formed. You get me? When this trade breaks here, we've already broken a structure. So the market has already shifted from uptrend to downtrend. That's shift in momentum. You get me? After we saw the bullish run, then there was a break of structure. Then we are seeing a bearish run. What you wait for as a trader is for that retracement to take this trade at this level, to come to this level. You get me? What are you seeing here? You can see left shoulder, head, right shoulder. This is a chart pattern. Understand? That you're seeing here. If you just zoom out on the bigger picture, this might be a higher time frame. If you go onto your lower time frame, you are going to see a whole different structure again. Because if you do a top-down analysis, you get to understand the story behind a trend. You might be seeing uptrend on your H4, but once you go to your M30 or your 1 hour time frame, you'll be seeing downtrend. Like, why? That's where top-down analysis come to play. That's when pure market structure. This is just the simple way of looking at technicals. You get me? And if you get to understand just this minor explanation, you will understand technicals to an extent. But if you still continue it over and over again, because to understand technicals you need more chart time. You cannot just see this and just understand technicals. It might not be clear like this on a chart, but when it comes to explanation, you are going to see a clearer explanation. But once you go into your charts, you are going to be seeing things like higher high. So a lot of weeks, a lot of that's why you need that trader's eye. You need to actually have that chart time to process everything. So once you look at the chart, you see It doesn't just come in 1 year or 2 years. It comes in like, you need to be consistent with it. You need to look at the chart over and over again to get to understand technicals. So I say technical is like 20%, psychology is 80%. Psychology is just the way you think. You get to understand your grade, you get to understand why you are doing some kind of things in life. It's like a self-development program for traders. Understand? So you get to understand a lot when it comes to psychology. So this is just like pure market structure. You wait for that retest again before markets start coming down, break this high again, change to uptrend. Like, this is just a simple strategy. You get me? Strategy is just higher highs, higher low, higher highs, higher low, higher highs, higher low. If you want to catch this trade, you take from the retracement and you go up and you calculate. This retracement is what you calculate, nothing else. And if you repeat this over and over again, you become profitable. And use a perfect market structure, you become profitable. You get me? Use a good, and if you have a good trading plan, and trading plan is one of the core things about psychology. If you follow your trading plan to the core, there's nothing stopping you. But that's the deep part about psychology. How am I going to follow my trading plan to the core? Am I a robot? You're not a robot. That's why you need to pen down your trading plan. You need to know what you're looking for. If you don't know what you're looking for, then you're just gambling. You get me? Because trading is just repetition. You repeat and repeat that same thing over and over again. Even your risk management. That's why you need a trading plan that surrounds your strategy. You get me? So this is just like a rough explanation of how psychology and technical intertwine. You get me? So yeah, keep that, and that's it for today. Pass like that.